Chang, and this is Bloomberg West. Coming up, Ford CEO Mark Fields tells us why he's finally focusing on a driverless car and doubling down in Silicon Valley. Plus, Tim Cook spending for survival in China. The Apple chief vows to invest even more in one of its most challenging markets. And Google fires a shot at Apple, Facebook, and Tencent in the mobile messaging wars. But is it too late to catch up to some of the most popular apps in the world? First, to our lead. Ford pulls back the curtain on its ambitions in autonomous driving, saying it's developing a fully autonomous vehicle for ride-hailing services and aiming to roll them out in 2021. Ford's car would have no steering wheel. It's one of the last major automakers joining the push into automated driving and ride-sharing. We've already seen tie-ups between GM and Lyft, Toyota and Uber, Apple and Didi Chuxing, among others. Now, Ford is pairing up with Chinese search giant Baidu, both of them investing $75 million in Velodyne, a startup making the LiDAR technology that helps cars understand their environment. It's also doubling its headcount at a Palo Alto research facility. But Ford still hasn't struck a partnership with one of the big ride-hailing startups like Uber or Lyft, or one of the big tech companies like Apple or Google. Earlier, I caught up with the carmaker's CEO, Mark Fields, and began by asking whether he considered partnering with a major tech player.
Overall, as we said, as we look at the technology, look at the roadmaps, if there's some things that others do better than we do, we're open to partnering, and just like we've announced today, 4 new partners.
Now, Tesla is very much focused on a more semi-autonomous model, and there's a safety investigation going on related to one of their crashes in which someone died using autopilot. You guys are focused on fully autonomous.
Correct.
Google is focused on fully autonomous. Your car isn't even going to have a steering wheel. Why is that the best way? Why not go the semi-autonomous route?
Well, I can't speak for Tesla, and clearly we're a leader in what we call level 0 through 2 driver assist features that will keep you in your lane, those type of things, stop you in traffic, stop and go traffic, and we're going to continue to be a leader there and continue to invest. But in level 4, we have a lot of confidence, and we believe in our plan that taking the driver out of the loop is really important, because this little no man's land of at what point do you have to re-engage the driver in a level 3 type of vehicle. We're kind of struggling with understanding how do you do that responsibly and timely for the driver, and that's why we're focused on level 4.
So someday, once you get your cars on the road, a Ford self-driving car will get involved in an accident. It will be rare, but it will happen. When that happens, who's liable?
Well, as we go forward, we have to have a discussion with the regulators, the consumer advocate groups, insurance companies, et cetera. And clearly, this is one of the areas that we're going to have to all work together to come up with good policies, both regulatory policies, but also legal policies.
Now, one of the investments that you've announced today you're making with Baidu in a LiDAR company. I spoke to the head of the self-driving car unit at Baidu, who said they want cars on the road by 2021 as well. Will this investment with Baidu help you get Ford self-driving cars on the road in China?
Well, let's put some perspective to this. We co-led the next series of investment for Velodyne. We were not partners with Baidu. They're just one of the financial partners there. So I wouldn't read anything more into that.
But what about your China strategy?
Well, our China strategy, we have a good business in China. It's growing. And as we think about mobility solutions there, we're thinking about how do we play a role in that, in addition to our core business of selling great cars and trucks.
Specifically on the sort of fully versus semi-autonomous thing, do you think, and I know you're not going to speak to like Tesla specifically, but do you think that the semi-autonomous model, can that be dangerous? Is that unsafe?
Well, I think one of the things that I said we struggle with, when you think of a level 3 vehicle, how do you re-engage the driver in a really timely way? That's really we've struggled with that, and that's why we've made the decision only to go to a certain level of semi-autonomous features, and then just take the route and saying we're going to go for the fully autonomous, because the tragedy that you saw in I believe it was in Ohio, Pennsylvania, or Florida. The gentleman from Ohio or wherever, you got to be there.
He was not from Florida, but it was in Florida.
He was in Florida, yeah. Those were some of our concerns, and that's why we've taken the path that we've taken. I can't speak to Tesla, we just speak to what we're doing.
And when it comes to working with a platform like let's say a Google or an Apple. Do you struggle with the idea of giving that much control to someone else?
I think it's really important going forward. Who controls the relationship with the customer is really important.
So in that case, who would control the relationship with the customer?
It depends on how all that's structured.
But how do you see this playing out? I mean, obviously, this is a hotly competitive area of the market, as we talked about.
Yep.
So many deals, so many partnerships.
Yep.
How do you see Ford coming out?
I feel really good about where we're at. Mm-hmm. And I feel really good about our technical capability, but I also feel really good about how we're approaching this and talking with others and being really realistic of what things we can do well and what things we can't, and who do we need to partner to allow us to realize our vision.
Do you think you need to invest in Lyft to partner with them in the future, or is GM getting ahead of themselves?
I can't speak to GM's strategy. I can only speak to ours, and our focus right now is to get a fully autonomous vehicle on the road. And we look at everything through the lens of what is going to create long-term shareholder value for us and profitable growth. And that's the way we look at investing, whether it's in our core business or our emerging business.
Have you driven in one of the test cars?
Oh, yeah, of course.
What's
well,
it like?
It's actually not, have you been driven?
Have you been driven? Excuse me.
It's, it's fun to drive, our core vehicles, and then it's fun to be driven.
What's it like?
It's really fantastic. You get used to it very, very quickly. Huh. You don't even notice after a while if you're having a conversation with somebody in the car.
Ford Motor CEO Mark Fields there, and here with me now to discuss more about the merging worlds of cars and tech, Bloomberg News' Alex Webb. So what do you make of what he said there? It seems like a lot of the reaction has been a lot of other companies have struck big deals, and this is still small potatoes.
I think there are two sides to this whole equation. On the one hand, you've got the investment in the technology, which allows you to do the autonomous driving on the one hand, and then the ride sharing is the second half of that. And the thing we've seen, the sort of big competitor, General Motors, they've invested in the technology in the form of cruise automation. Was a big deal, reportedly as much as $1 billion, perhaps a little bit less, some people think, but $1 billion that is. But then they've also invested in some ride-sharing companies. They've thrown $500 million at Lyft. Now Ford, the investments they announced today, such as the Velodyne one, is very much focused on the technology which allows you to do an autonomous vehicle. It doesn't let you get into the ride-sharing space. Now, clearly all of these big ride-sharing companies are burning through cash at a precipitous pace at the moment, and perhaps maybe that's the reason why they don't want to get into it yet. But when it comes to the point where these things are starting to make money and turn off big profits, then Ford's probably going to have a look around.
I thought one of the most interesting things he said was it's really important to figure out who holds the keys to the customer, who controls the relationship with the customer. And I sensed a bit of hesitance at working with an Apple or a Google, or any of these other players. I don't know about you.
Well, one of the big tie-ups that's been announced already was Fiat Chrysler, saying that they are going to provide some vehicles to Google.
Right.
And the CEO, Sergio Marchionne, was very sensitive and said, we are not just going to be bashing metal for Google then to get all the value creation. And methinks the gentleman doth protest too much. Like, it was a certain element of, well, there is a fear that all the value creation, which is in software, which is highly profitable, comes then from Google or Apple, whoever it might be, and then the low margin building of cars is done by the classic OEMs.
Right, but Fiat Chrysler is doing the deal. Ford isn't.
Right, and I think the difference here, though, is that Fiat doesn't have perhaps the cash reserves and the ability to raise debt as readily as Ford or General Motors does, so it's harder for them to throw a huge amount of money at research and development. So Ford perhaps is just backing itself, saying we can have the cash to go into this space if we want to. One might also ask, though, how many players are there of any significant scale in the ride-sharing space? And all of these guys have now got big investments from car makers. Has Ford missed the boat? I don't know. But, it's still quite early in this process, but it's a possibility.
All right. Now I want to talk to you about another story today out of China. Apple opening a big new R&D facility in China. This is according to an email statement obtained by Bloomberg News from CEO Tim Cook, who is in Beijing. The iPhone maker didn't specify the office's location or how many employees there would be, but Cook says this site will bring together engineers from some of its existing centers in the region. Since 2011, Apple has more than doubled its number of corporate sites in China to 45, and its spending on R&D has quadrupled in the same time frame. Alex, tell us more about what this means.
I mean, a lot of these emerging markets, that assumes you include China as an emerging market, there's a lot of quid pro quo stuff. We give you access to our market, you invest in our economy, you bring jobs here, you bring factories here, you bring research and development here, we will give you greater access to the market. Now, this isn't, I don't think, a colossal investment. It's a lot of it of consolidating existing sites, bringing them towards one centralized hub, wherever that transpires to be. But it is another, notch on the tick list of saying, here, China, we're helping you, do us a favor, let us keep opening stores.
And quickly, how many times has he been there in the last year?
God knows. I mean, those air miles must be great.
Or India.
Yeah. I mean, India is the kind of next one on their list. That's the real target. And I think, China, there's a sense that it might be saturated. We'll see how that goes when the new iPhone comes later this year. But India is the next one on their target list.
Tim Cook is getting some stamps in his passport. Alex Webb, our Bloomberg News reporter, thanks so much. Later this hour, we will continue our look at the transformation of the auto sector. We'll hear from Black Lane, the latest German car booking startup to win an investment from Daimler. Plus, Google tries to play catch-up in the mobile messaging wars. But is there room in a field dominated by Facebook, Tencent, and Snapchat? That's next. This is Bloomberg. India has a new internet unicorn. Hike Messenger just raised more than $175 million in a Series D round from big tech backers, including Tencent, Foxconn, SoftBank, and Tiger Global. That pushes its valuation up to nearly $1.4 billion. The company says its users send 40 billion messages on the platform a month, and that the new funds will be put towards investments in AI, machine learning, and augmented reality. And staying with mobile messaging, Facebook's WhatsApp and Tencent's WeChat dominate. And Google, despite winning the war for email, has struggled to come up with its own messaging hit. Today, we learned it will try again with a new video chat app called Duo. It's probably closest to Apple's FaceTime, but fits into a growing and complicated lineup of communication tools from Alphabet. Our Bloomberg Intelligence analyst Jitendra Wawal joins us now to explain the strategy. So obviously, Google wins a lot of things, email, search. Why are they trying to do this?
Well, they're missing out of the primary mode of communication now, which is messaging platforms. So if you look at the number of people on these platforms, right now it's more than 1.6 billion and growing. So Google is sort of lagging into the monetization potential of this massive audience because, you know, more and more services are going to eventually converge into these messaging platforms. And Facebook and Tencent and Snapchat on the younger audience parts might take the cake. And and Google is sort of missing out here.
It's going to run on Android and iOS. If I have an iPhone, why would I use this instead of FaceTime?
That's a big question.
FaceTime is so easy.
Absolutely. That's a big question for every user. Now, there are some features that are a little different, but again, you know,
like what?
Like, you know, for example, you could see the calling, as soon as you call, you could see the other person and stuff like that. You know, those things, if they catch on, easily Apple can replicate. Easily like Facebook Messenger can have that, or Snapchat can have that. So not having the user base starting from scratch is going to be a big uphill battle here.
Obviously, Facebook and some of these Asian messaging companies have a huge head start. How optimistic are you that Google will be able to catch up?
See, if you look at the history here, Google tried to close the social networking gap with Google+. That didn't go well. So there was this buy versus build dilemma that, you know, at some point it's going to come up again. Because, like I said, even the AI-rich features that Allo, the messaging app, has, if that catches on, Facebook is not going to be that far behind to have that, because they already have the audience, they already have the engagement, and between the two platforms, you have like 1 billion people on each one of them and growing. So this is going to be an uphill battle, and Google will have to, again, face the dilemma, should we buy or should we build?
Facebook hasn't even started trying to monetize WhatsApp. What is the monetization potential of a video chat app like this for Google?
So it's
how much money can they make on
So it's not just about the video chat, it's just about messaging platform, because eventually it'll converge. You know, now they have two different ones, right? One is for video, which is Duo, one is for normal messaging, which is Allo. Probably the strategy there is if one of them catches on, then they can integrate the other and get that audience on board, right? But Facebook basically is just in the early legs. They're trying to increase interaction with businesses, and eventually once that organic interaction increases, then they'll monetize through the integration of different services, payments. There are a lot of other avenues, but right now it's just above the iceberg.
Allo, Duo, we'll be watching to see if one or both catch on. Jitendra Warwal, our Bloomberg Intelligence analyst, thanks so much.
Thank you, Emily.
A story we've been following, Univision is said to be buying GAWKER Media for $135 million. This according to Recode and Reuters. Earlier, Bloomberg News reported that Univision was one of two bidders, with Ziff Davis making a formal takeover offer for GAWKER. GAWKER was driven into bankruptcy in June after losing a high-profile lawsuit to Hulk Hogan, who we later learned was backed by Peter Thiel. Coming up, the former chief of Google China says Airbnb has zero chance of reaching a high level of success there. An exclusive conversation with Dr. Kai-Fu Lee next. This is Bloomberg. Kai-Fu Lee has been a driving force in Chinese tech as former head of Google, China, and Microsoft Research in Asia. These days, he's head of SINOVATION Ventures, a venture capital fund targeting early-stage companies in China. I sat down with Kai-Fu Lee for an exclusive interview from Taipei and asked what he thought of the recent UBER-DIDI deal. Take a listen.
It was a win-win for both of them. Didi could have taken more time to eliminate Uber, but that would have taken too long.
How do you think it impacts other U.S. startups in, the sharing economy business, like Airbnb, which is trying very hard to break into China and looking for a Chinese CEO?
I think looking for a Chinese CEO is a smart move. That's something Uber never did, and that is a huge problem for any American companies operating in China. So Airbnb is smart to look for a Chinese CEO, but its business is culturally different to be run in China. I think most of their efforts are trying to get Chinese tourists to stay in Airbnb abroad, which is okay. But if they want to come in and build an American-like franchise, I think the user base, the habits of where people stay, and the expectations on people who lease out space and also people who try to rent space are very different, and they would be in for a culture shock. Just think, if this market were so easy, wouldn't the copycat have become a $10 billion company already?
So what do you think the odds are of Airbnb succeeding in China, where others have failed, so many others?
Well, if you're asking how likely will they become an Apple level of success in China, I would say 0.
What about less than Apple, like an Airbnb level of success in the U.S.?
That's also 0. I think if they want sort of the Uber type of opportunity, they probably have a shot.
Interesting. So, obviously, Facebook is still blocked in China. Twitter is still blocked in China. What do you think the likelihood is of those companies ever being unblocked in China?
I think it's almost not relevant for those companies anymore, because even if they were accessible, user habits are very well formed, and users love using WeChat and the Taobao and other tools. I think there's no chance users would migrate to their services even if they were available.
Google, of course, you know this better than almost anyone. Google's own struggles in China and the decision to exit China. Do you see Google ever coming back to the country?
Well, Google will have to try a little harder than the other companies because of the way it chose to leave. But Google has a very diversified line of products. So I think it has an opportunity to pick the least sensitive products to try to land in China. So maybe something that's hardware related and doesn't have to do with social networks, end user data, or censorship.
But what about the search engine?
Search engine will be a little difficult. Google pledged not to do censorship, so that will make it difficult to enter for the time being.
Let's talk about the reverse. WeChat, of course, has had great success in China, but great difficulties entering the U.S. market. They've got 700 million users. What is the likelihood that they'll be able to make the reverse happen and break into the United States?
I think also pretty low. I know there are a few notable exceptions, but I would view them as exceptions. I think the best path for Chinese companies that want to go abroad are to go to the countries that are similar to China. That is, countries that are becoming wealthier, developing countries with large population, highly dense cities, young people who want to try new things. So countries like India, Indonesia, Brazil, I think even Middle East. So if I were a Chinese entrepreneur deciding to go abroad, those are the countries I would focus on, not the United States.
That's SINOVATION Ventures founder Kai-Fu Lee. We will have more of that exclusive conversation next, including how he handled a PR crisis as former head of Google China. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg West. Let's begin with a check of your first word news. U.S. warplanes pounded Islamic State's last stronghold in Libya today. The attacks in the city of Sirte bring the number of U.S. military airstrikes against the extremist group to 48. The U.S. began its anti-IS campaign in Libya on August 1st. Russian warplanes today used a base in Iran to attack Islamic State and other rebels in the Syrian city of Aleppo. Last week, Russian President Vladimir Putin discussed the fight against terrorism with Iran's leader Hassan Rouhani. The European Aviation Safety Agency is calling for tougher medical exams for pilots. The group wants results from drug and alcohol screenings included in mental health assessments. Last year, a Germanwings pilot with a history of depression crashed a plane into the French Alps, killing all 150 people on board. The son of imprisoned drug lord El Chapo Guzman may be among a group abducted by gunmen at a restaurant in the Mexican beach resort of Puerto Vallarta. That's according to the Associated Press, which cites a state attorney general who says Ivan Archibaldo Guzman was, quote, presumed to be among the kidnapped men. Experts say he assumed control of parts of his father's business after Guzman was rearrested in January. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Tuesday here in New York, 8:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, New Zealand's been trading 30 minutes on Wednesday morning so far, and already looking pretty good, up 2/3%. We're expecting to see a little positivity on the Nikkei today, but a flat start here in Australia on the ASX. The big one to watch locally will be BHP. Shares in the world's biggest miner rose 0.7% in the London trade overnight. That is despite it recording a full-year net loss of $6.4 billion. Its worst ever for BHP, but the market agrees the worst is probably over for the big miner. A lot of earnings out today, so I'll just give you some of the highlights. Tencent second quarter earnings. This will be their first announcement since the $8.6 billion acquisition of Supercell. And Cathay Pacific out of Hong Kong reporting first half earnings as well. Net income may be down for Cathay by 46%. The airline hit by fuel hedge losses and possible new landing fees to watch out for in Hong Kong as well. That's to fund the new airport expansion in Hong Kong. Just a quick look at China. Further example of opening of financial markets there. Late Tuesday, it's approved the Shenzhen Hong Kong Stock Connect. I'm Paul Allen for Bloomberg TV in Sydney, Australia.
This is Bloomberg West. I'm Emily Chang. He is one of the leading voices in China's tech community. Former Google China President Kai-Fu Lee is now one of the country's leading angel investors. In part two of my exclusive interview, I asked him what his fund, SINOVATION Ventures, is betting on. Take a listen.
Yeah, we at SINOVATION Ventures, which is our new name, are focused on several things. One is we are strong believers in artificial intelligence, in changing the future of China entrepreneurship. Artificial intelligence apply to both traditional industries, so making things like areas like insurance, banking, hospitals, schools become more efficient and help users get more value, make more money from investment, get your disease treated more efficaciously, learning more in school. Those, because China has a massive amount of data that could be mined, we think that's a great way to use AI on big data. We also believe in AI applications in building computers that can see, hear, and understand. A couple of industries we think are very exciting are the securities industry, for commercial, home, as well as government. We think robotics is very exciting, especially for certain vertical segments in the home, such as watching young kids and older people. We also think robotics in commercial applications, like the Amazon Kiva, is very exciting for a manufacturing economy like China. These are probably our biggest investment themes in China. We also look at enterprise services, which is now fledgling but really starting to take off. We look at the creation of great content and recreation and entertainment, kind of the next stage beyond mobile games in China. We think that's a big area as well.
And, you know, we've sort of touched on this. Part of the reason that it is so difficult for U.S. companies to expand in China and for Chinese companies to expand in the United States, are there cultural misunderstandings? Is it purely, you know, regulatory issues? You know, what are some of the, you know, most common reasons that relationships between the U.S. and China at this level, the investing level, the entrepreneurial level, fail?
Okay, I'll give you a few examples. If you're a Chinese entrepreneur that wants to promote its application in the U.S., well, you've never heard of Facebook before, so how do you do Facebook promotions? What you used to distribute your apps on 10 different app stores. and there are various ways to get your apps to the top in those app stores. But in Google Play, it's owned by one company that has very strict principles of how to operate. In China, if you were doing a security application, you just go and sell to the provincial government. But in U.S., the opportunities are completely different. So you have to not only be fully conversant with the American business, but drop all your practices in China. So the reverse is exactly the same. And also on top of that, you are dealing with very aggressive peer competitor entrepreneurs. You're dealing with VCs who will very quickly give you a lot of money, but give you a lot of pressure. You're dealing with competitors who may not follow the same professional standards and may create PR nightmares for you. You're dealing with a very different set of government regulations. For example, when I was at Google, I had to defend the company. One time we were like a month late with some tax payment, and we became headline about being tax evasion, being prosecuted or something like that. We had some trouble with search terms, and those were blown up as a pro-Japanese search, and as in the Sino-Japanese War anniversary. So these are ridiculous, outlandish, fabricated rumors created perhaps by our competitors or people who didn't like us, and they were spread out everywhere in headlines and very difficult to even clarify ourselves. So those are the types of issues that makes it extremely difficult. So I would generally advise American entrepreneurs to find a partner in China if you want to go to China, and the same with a Chinese partner to find an American partner and set up an arrangement where there's an alignment of interest. Maybe let them invest in you, and let the people who know their home country take the decision-making responsibility and drive your company forward in the country in which they understand. Don't try this yourself. Don't think you can just go hire someone and solve the problems. You can see there are many casualties before you among the great companies like Yahoo, Amazon, eBay, Google, and now Uber.
SINOVATION Ventures founder Kai-Fu Lee there from Taipei. Well, Xiaomi may be losing ground in China. Second quarter phone sales tumbled 38% in China as rival Huawei took top spot in the world's biggest market. Xiaomi shipped 10.5 million handsets, according to IDC, down from more than 17 million a year earlier. It's now in fourth place in China, behind Huawei, Oppo, Vivo, and Apple. Xiaomi disputes IDC's numbers, saying other researchers found much higher shipments. Coming up, Didi Chuxing and Uber China. It's a multi-billion-dollar deal of the summer. Why the tie-up may breeze past Chinese regulators next. This is Bloomberg. More news from the ride-hailers, this time from Asia, where Didi and Uber are moving ahead with a planned merger of their China businesses. Major deals are so often held up by antitrust regulators, but Bloomberg reports this multi-billion-dollar merger is likely to breeze past China's Anti-Monopoly Bureau. Our Bloomberg tech editor in Asia, Peter ELSTROM, joins us now from Tokyo with all the details. So, Peter, why? Why wouldn't regulators try to hold up this deal?
Well, it is a good question. The two companies, as they combine, will probably end up with more than 90% of the ride-hailing market. But there are a couple of factors in China that will probably lead to this deal being approved by regulators there. A big part of it is that this industry is so new at this point that it's not clear exactly who their competition is going to be. And depending on how you define the market exactly, you could see lots of competition. You could decide that there's not very much competition. And one of the things that our sources tell us is that it's very easy to define this market more broadly as transportation in general, in which case there are a lot of other companies that provide transportation in addition to Didi and the combined Uber. Plus, not incidentally, you have a Chinese company buying one of the foreign companies that has been competing with them pretty aggressively. So there's a pretty good chance that regulators are going to give this approval.
So do you think the Anti-Monopoly Board in China will actually even take a look at this? I mean, aren't they required to come in when there are deals involving companies that have more than $60 million in revenue, which you would assume Didi makes?
Yeah, well, it depends on how they define the revenue and how they report that revenue. But yes, regulators are going to look at this. There's no question about it. It's too high profile of a deal. It's an international deal. It involves some very high profile names within the country. So they will certainly look at it. And one of the regulators said they do need to make an application for approval. But then once they do that, regulators are going to look at it. The Ministry of Commerce will look at it, the Anti-Monopoly Bureau. But also remember, China is a country where the government is very used to regulating big monopolistic type companies. It's very different from, say, the United States, where they want to have freewheeling competition in the private sector. The government is much more comfortable regulating these businesses once they do get a large share of the market. So you could see a regulator approve the deal and then watch pricing closely to see whether they're trying to gouge consumers or not gouge consumers. Then there could be some action after that.
And talk to us a little bit about the role that subsidies play in the China market.
Well, the two companies were quite vocal about the fact that one reason for this merger is they were subsidizing their businesses so much. They were offering subsidies both to riders and to drivers to try to get them on board. Riders so that they would try the services, they would know what Didi or Uber was like and take that instead of, say, a cab or public transportation. And the drivers, so the drivers would come on board and give Uber more drivers within a certain area or Didi more drivers. So both of the companies are looking forward to the time when they don't have to pay those kinds of heavy subsidies. Also, regulators have come out and they've said they don't want to have a market that's driven largely by subsidies. They see that as kind of a distortion in the market, could pull riders away for a while and pull capital away from other areas that may be more sustainable from a profit standpoint.
Okay. All right, Peter ELSTROM, our tech editor in Tokyo. Peter, thanks so much for that update. Turning now to Germany, where car booking startup Blacklane has just closed its largest funding round to date. The Series C was led by Daimler, parent company of the luxury car maker Mercedes-Benz. And you may remember it recently merged its own ride-hailing service, MyTaxi, with the UK's Halo. Bloomberg's Carolyn Hyde has more from Berlin.
Yet more funding flooding in for the mobility space. This time, it's a limousine app called Blacklane, based here in Berlin. And we've seen it already scale in excess of 200 cities they're present in. They've just raised money, more than 10 million euros, being led this round of investment by Daimler, which is the owner of Mercedes-Benz, a car giant based here in Germany. They're raising funds to scale yet further to improve the app, but also been speaking to us about the regulatory environment and also how they're not a competitor to Uber. They can coexist, but they won't be subsidizing their rides to start off with. Jens Walthoff, the CEO, spoke to us here in Berlin.
We are investing, what I said, into the customer. That means we are building our technologies around the driver experience and also the customer experience. Our drivers are on average extremely fragmented, like two cars on average throughout the world. And that's like a very crowded space that needs to be consolidated. So we are heavily relying on technologies there in order to do so. On the customer side as well, nicer product presentations, easier booking funnels, but also integrating, following our customers wherever they go. That means, on the one hand, digitally, where do you book your travel? Are you searching on an airline site? Are you searching on an online travel agency site? Where you typically book your flight and your hotel, that's where Blacklane also wants to be present in order to fill the door-to-door circle, right? That's the one piece, and the other piece is the physical experience. We follow our customer in a sense wherever they go, we want to be there. So that's why we have launched over 50 countries, 200 cities, 400 airports, and continue to do so.
Do you understand the frustrations of some of the larger US companies with the regulations here in Europe?
Yes and no. There are some regulations in place that have a good reason for being in place because they are good for the safety of customers and or drivers. On the other hand, there are also some, I would say, like competition limiting regulations out there, pretty old ones that doesn't belong into our today's world anymore. So
you're hoping that the EU can find ways of making business easier here in the EU?
Yes, here in the EU, but also elsewhere. Look, we are always looking from the customer perspective into it, and for a customer, choice matters, right? Choice makes everything better, and you need to have cheap mobility options, more expensive ones, more for the short distance, some for the longer distance. As soon as you offer choice, actually all the mobility services, even a taxi industry, starts to grow because customers at the end of the day, they come to a point where they don't need an own car anymore. That is standing around almost the entire time of its life. And this budget that is freed is then invested into mobility services, also into taxis or ride-hailing or car-sharing or a black lane service.
It seems as though you see yourself fitting into the ecosystem where you can coexist quite happily with an Uber and with some of the other taxi companies and car sharing. What about China, therefore, in terms of, this is an interesting story that Uber has just sort of decided to hand over the reins, decided to merge rather than compete over there. Is that a region that you'd be happy to go into and are going into?
It's the same story. We are not a local mobility service, therefore it doesn't matter about what country we are talking. We are serving an international traveler need. And when you think of travel, you can differentiate a country by incoming travelers, mainly international Western travelers coming into China, outbound China tourists and business traveler going into the Western world. And then at the end of the day, you also talk about domestic travel, and that's largely very local, short distance. That's not our piece, but we bring people into China, we bring people out of China, and therefore we can greatly coexist with all the mobility services around.
And you've been able to do that efficiently thus far?
So currently we are working in the background secretly, don't tell anyone, on launching some cities in the APAC market. We already have launched, I would say, 24 of those in the last weeks, and we continue to do so because we want to serve a global client base.
Bloomberg's Carolyn Hyde with Blacklane CEO Jens Waltorf. Up next, the 3 things you need to watch when Chinese internet giant Tencent reports earnings on Wednesday. This is Bloomberg. Chinese internet giant Tencent is set to post second quarter results Wednesday. Here's 3 things we are watching. First, Supercell details. Online games are Tencent's biggest source of revenue, and the company just made a massive bet on its future success here. Tencent and other partners agreed to pay $8.6 billion for the controlling stake in the maker of Clash of Clans. Q2 results won't likely be impacted yet because the deal is still being finalized, but we could hear more about when investors will feel the impact. Second, ad revenue, because after gaming, advertising is the #2 biggest contributor to Tencent's top line. Tencent warned in May of potential speed bumps ahead having to do with contract negotiations and belt-tightening from advertisers. And third, user numbers. Tencent depends on apps like WeChat and QQ being able to generate traffic for both games and advertising. The 2 apps had a combined 1.4 billion monthly active users as of March. We'll be looking to see whether Tencent can hold on or even grow those already staggering numbers. Now, a story we've been following closely. Vegan mayonnaise startup Hampton Creek has been in the spotlight for paying contractors to buy its own products from U.S. supermarkets. The operation made the mayo seem more popular than it really was, though Hampton Creek's CEO claims it was part of a quality control program. Now, CEO Josh Tetrick is trying to boost employee morale. Olivia Zaleski, who's been breaking the story scoop after scoop, no pun intended. You've got more information.
Yes.
Somebody gave you notes from an all-hands meeting and had some details on what Tetrick had to say.
Absolutely. So someone was in a meeting on Friday where Tetrick spoke to all employees who are all shareholders in the company, and he took questions from his staff. A lot of questions about the buyout program that we reported on, as well as concerns around fundraising, why the company has not reached its unicorn status just yet.
So in the meeting, he maintained that this was for quality control purposes, right?
He actually, according to the transcript that we have, didn't go into those details. He spoke more. Somebody asked about the Creeker program. What is it, and is it still in existence today? And he said that it was about 100 people or more. He said a little over 100 people who were hired as contractors. He explained that to his employees because they may not have known about it. And he also said that they were people who really cared about the company. He did not address the allegations that they were purchasing the products to boost sales, nor did he discuss the quality assurance aspect of it.
But he did talk about fundraising and financials. What did he say?
He did. He said that they're just really days away. I mean, he said it could be anywhere from 48 hours to 21 days. And he said this on Friday, that they would close a round that would value the company at $1.1 billion. And this is something that we reported on in May. And somebody in the meeting asked why it was taking so long for them to seal that deal. And he said it was just minutes away.
And do we know if the deal really is minutes away?
So we reached out to, so he didn't say who the investors would be, but he described them. He said a large German media company. So we reached out to every German media company, and all of them declined to comment.
And do we know if your story has compromised any of their relationships with the supermarket chains themselves?
We don't. I mean, we've reached, or I can't say so on the record. That's all I'll say.
Okay. Olivia Zaleski, we will keep following your stories on this. I know you are watching it very closely.
Thank you.
Great work.
Thanks.
And that does it for this edition of Bloomberg West. Tomorrow, do not miss our conversation with the godfather of the internet. Google's chief internet evangelist, Vint Cerf, joins us to discuss whose job it is to oversee the World Wide Web. That's all for now from San Francisco. This is Bloomberg.
studios in New York City. This is Charlie Rose.
We begin this evening with the 2016 presidential election. Donald Trump is seeking to stabilize his campaign after weeks of stepping on his message and declining poll numbers. Hillary Clinton continues to widen her lead in key battleground states, including Florida and Pennsylvania. Trump's campaign chairman, Paul Manafort, is also under fire. The New York Times reported over the weekend that he received $12.7 million in undisclosed cash payments for consulting with Ukrainian President Viktor Yanukovych's administration. Manafort has denied the New York Times report. Trump delivered an address this afternoon from Youngstown, Ohio, focused largely on his strategy to fight radical Islam.
The time is overdue to develop a new screening test for the threats we face today.